right. Boy, that time flies when you're having fun, doesn't it? It's about that time of day again, though, here, folks. Wednesday evening. It's May the 15th, 2019. My name is Joseph, and this, of course, is your nightly newsletter. Now, remember, guys, I help traders find predictable, dependable, reliable, profitable trading opportunities. And to do that, we use a simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight's a little bit different. My job tonight is to get all set up for tomorrow's trading session. We'll find the best levels, the best setups, and most importantly, all the pitfalls we want to avoid for tomorrow. That's Thursday's trading session. And we're going to cover oil, S&P, Nasdaq, gold, and of course, we can't forget about that mighty euro. I'm going to jump in here first on oil tonight because we have a very strong bull run after that weekly inventory report. But it doesn't look like this is a very good spot to be buying right now. We might be walking into a trap here if we try buying this oil right now. Let's dump into that black gold, that Texas tea, because as you can see here, oil had that nice, big, strong run in today's session. But sure enough, look where we are right now. We're back up at the high of that weekly trading range. In fact, on this chart right now, right, you can see one range, two ranges, you got a channel, you got measured moves. Boy, we have a lot going on this chart. In fact, a lot of what we're going to be talking about tonight is how to use these different layers, right, of market structure to identify or to kind of listen to the story being told here tonight. So the bottom line is we know we're bullish. More importantly, we know it's a very strong move. And of course, anytime I see a strong move, I know exactly what to be looking for next. The problem is it's not a great spot to be buying up here. So ultimately, I need price to either pull back so I can buy off of these lows. I'm going to talk about three different patterns I'll look for to buy off of those lows, or we've got to get some more proof going higher. Now, if we can go higher here, it's very, very sensitive that we get a specific type of breakout going higher because, again, we are at the top of that range. So we're going to talk about buying that breakout, buying the pullback, right? We'll also talk about what it looks like to be a seller on this chart here tonight as we go into that rollover period tomorrow into the end of the week. We're going to talk a lot more about this oil market here this evening, so make sure you stay tuned on that. Boy, oh boy, what a rally here this afternoon on that S&P. We'll talk more about the cause of that, but boy, oh boy, if you were here last night on the newsletter, boy, we nailed that short off the high from last night's newsletter. Hope you guys made a killing on that. If you were tuning in last night, you were ready on that one. But sure enough, right? Sure enough, they can't keep their fingers off the Twitter button these days, right? And price rallies back higher. Strong rally back higher. That, of course, tells me to expect one important thing here for tomorrow. I know we're bullish. I know I want to be a buyer. And I'm going to layer these things right on top of each other. I got a trading range. Trading range gives me a good buy zone. But more importantly, check out this hidden channel coming in off of those lows. And remember that midline we talked about on the gold earlier this week? Yeah, we're looking for buying opportunities here as we pull back. Now, very, very important, though, for today. Does it pull back shallow? Does it pull back steep? Does it keep going without me? Those are three scenarios I've got to be ready for. All three of those are going to give me different entry setups that I need to look for. We are going to roll up our sleeves on this S&P tonight. Over on the Nasdaq, lots of stuff going on right now on the Nasdaq, right? I've got a lot of different things moving on this. We're going to dig into a lot more tonight. But it looks like those Nasdaq traders are trying to fill that gap back at 76.11. It's the end of a Wednesday, so they better hurry up if they want to get that gap filled by Friday. Remember, that's what happened last week too, right? Last week, by Friday, they were right back to fill the gap. Maybe tomorrow here on that Nasdaq. Bottom line, though, is I've got a lot going on right now. One is a spike in channel. Two is a very wide major channel, right? And three, of course, right? Three, of course, is that measured move. All three of these, right? All three of these clues tell me I've got either a shallow pullback, I've got a deep pullback, or I've got a breakaway higher. Okay, if we get the breakaway higher, I got to worry about that gap fill being the target. If we get a shallow pullback, very different entry than a deep pullback on this. So we've got a lot of opportunity here in the Nasdaq. We know where they're trying to go. we just get ready for all three of these scenarios. We're going to grab a look at that Nasdaq in a lot more detail here tonight. And of course, how about that gold? Boy, oh boy, range bound. You can definitely tell gold is waiting for something more. You can definitely tell gold is balanced here right now. We talked about, obviously, right? We talked about that 1-2 up and over from last night's newsletter. So if you were watching last night's newsletter, you were locked and loaded here for today. But they failed to retest the high. And that failure to retest the high creates a falling resistance. Failure to retest the low creates rising support. And this thing is all coiled up here right now. So we definitely know we have a range. It's a bull bias into that trading range, which tells me one very important piece of this puzzle. But I got a lot to look at here, right? I want to be a buyer. I've got a hidden channel to work with. I have a major channel to work with, right? I've got a bunch of key support levels here, creating more buy zones. And just like on the S&P and the Nasdaq, do we get a shallow pullback, right? Do we get a deep pullback? Or do we get a blast higher, right? And if we do, is that a blast for a breakout? Or is it going to be a breakout failure? We're going to break down all four of those scenarios here on gold because, again, lots of stuff to consider here as we layer on, right, those different market structures. We'll take a look at all four of those examples on the yellow metal. And then how about that flash crash today on the euro? This is the European, this is the euro version, right, of the flash crash. Kind of funny here today. We, of course, had some news come out this morning about 10:15 that shot the market lower, shot it right back higher. Now, anytime I see kind of these flash crashes, it always tells me one really important thing. We're going to dig into that tonight on the video. But the bottom line, though, is I'm still thinking this thing's going back up to retest that high. Get a strong move back up. Anytime we see a strong move in one direction, you can probably, right, finish my sentence there. If not, we're going to talk a lot more about how I can be a buyer here. But at the same time, what if it drops? Because where are they trying to go? They're probably trying to go back to that big round number. If it drops and becomes a bear market now how do we sell down here? Because there's not a lot of room down here to be a seller. I think the money is going to be made here being the buyer here, and we've got to really be careful, right? Do we run back up? Do we collapse back down? I got a great trend line, right, coming down overhead. I'd love to use that. So we're going to dig into that, and we'll talk a lot more about the euro and about how I want to grab that short covering rally here on that euro tonight. A little bit low volume right now, but we've got a great opportunity here for a nice easy move back up to retest those highs. So we're going to roll up our sleeves and break all of this down. Euro, gold, Nasdaq, S&P, crude oil. Before I jump into those charts, though, here tonight, guys, I want to make sure you never miss another newsletter video. And to make sure you never miss a great video, just join our mailing list, and I'll email you every time our nightly newsletter goes live. And to do that, all I need is your name, your email address, hit that subscribe now button, and then don't forget, when you subscribe to the list, make sure you check your inbox because I'm going to send you a welcome email along with a verification email to make sure I get your real email address. And that welcome email is going to have a bunch of goodies in there so you can get the most out of our time together on this nightly newsletter. So if you want to be the first to know when the newsletter goes live, if you want to make sure you never miss another great newsletter, so many traders rely on this newsletter every evening. Join the mailing list, check your email, and don't forget, sometimes those verification emails, they go into your spam folder, promotions folder, junk folder, whatever the case may be. If you don't see the email, right, check your spam, check your junk. It'll probably be somewhere bouncing around, right, in your inbox somewhere. So find it, verify your inbox, and enjoy that welcome email as well. All the goodies there as well. Now, one more thing here, guys. I'm always listening. Boy, I got so much great feedback last night. The question last night was, how are you guys using the micro contracts now, these micro E-minis? Are you even trading them? What's your feedback? And I had so many great comments on the channel from last night's newsletter. I want to keep hearing from you guys. Have you learned about these new micros? Are you using them? Are you aware of how expensive they are to trade, right? What's your plan for these micros? Is it a waste of time for you? Are you loving on them right now? Because I'm thinking about adding them into my nightly newsletter. I want to find out how many of you guys are actually trading them out there or are interested in trading with them. them. And if you're not, what's your favorite market, right? Which of these big 5 markets do you always trade every day? Or are you like me and you're always just looking for whatever sets up the best, right? How do you use this newsletter? Do you watch the whole thing? Do you just watch the stuff that applies to you? I'd love to get your feedback. I'd also love to know what your thoughts are on those new micro Emini contracts, right? Is it really going to kill the Forex markets? Do you really think all the hype is worth it? Let me know in the comment section below. And while you're down there in the comment section, don't forget to like that video. Give me a thumbs up on the video tonight because, boy, it goes a long way to helping me spread the word about our newsletter here. And while you're down there, hit that subscribe now button. Join the channel here on YouTube and get those notifications when everything is published new. And don't forget, guys, I know it's a website, but I'm a real person. I'm always here to help. If you have any questions, charts, data, brokers, strategy, free trial, free pass to our trade room, right, or becoming a client. If you have any questions, you can always pick up the phone and call me anytime. I'm here in Los Angeles at our corporate headquarters in LA. I love to answer the phone call, answer all your questions. That way you don't need to go out and try to find it elsewhere. You can get the good truth here from me, right? So call that toll-free phone number. I'm always there. I know I'm old school. I actually talk to my clients. No chat bots, no call centers. Give me a call anytime if you guys have any questions about anything that we talk about tonight on this newsletter. Speaking of which, let's get into that newsletter, JJ. Let's get this party rolling here tonight. Of course, today is Wednesday, so we're getting ready for tomorrow. That's Thursday's trading session. Now, tomorrow we get some more news on the schedule, right? We get some housing starts, some jobless claims, and of course, some Philly Fed Outlook survey. The big news tomorrow will be the housing starts. That is the big news of the day tomorrow morning. That is the big scheduled news of the day tomorrow morning. Obviously, we're going to continue to hear more, or we'll read more, right, from the Twitter feed, right, of President Trump right now. It appears that Twitter is the most market-moving event right now. So we will definitely be keeping our eyes open for unscheduled news reports. This ongoing trade war, the turmoil, right, regarding the Iranian oil sanctions. There really are two big themes right now in these markets. One is the trade war. I don't really like the term trade war, to be honest with you, but the trade negotiations, right? The ongoing negotiations right now. That is the big theme, the big vein kind of running through these markets right now. But don't forget, if you're in the energy markets, you've got the Iranian oil sanctions, right? They're trying to choke that out. And so there's a lot going on right now in the oil markets as well, which is giving us some nice, big, volatile moves too. So those are the unscheduled stuff that we'll definitely be keeping our eyes and ears open tomorrow as well. And speaking of tomorrow, don't forget, guys, we all know there's money to be made in these financial markets. The problem is the markets are complicated, right? Which markets do you choose? What time frames do you use? How do you know where to buy and where to sell? We do this together every day in our trade room at 8 o'clock Eastern time because we all know there's life-changing opportunity every morning at the opening bell, but these markets are complicated right now, and it really helps to have a coach to do it there with you. So every single morning, 8 o'clock Eastern time, hope I see you there tomorrow morning as well. Open up 8 o'clock Monday through Friday, and we're going to get this party rolling tomorrow bright and early. Now, let's get ready for tomorrow. Starting off on crude oil, we'll go crude, S&P, Nasdaq, gold, and we'll wrap up tonight on that euro. Please don't forget, we are watching volume right now on the oil markets. We are looking at rollover tomorrow. Probably not tomorrow, but keeping an eye on that going into Friday. As I look at the front month contracts on oil futures right now, you can clearly see the CL 619 contract has most of the volume right now at just shy of 700,000 contracts traded. The next available contract, of course, the next month, that is the 719 contract, because after all, oil rolls over every 1 month. So the 719 contract, once that 719 contract has more total volume than the 619 contract, we'll trade the 719. It could be tomorrow, probably not tomorrow, probably going to be one of those half and half days tomorrow, and we'll look for the actual rollover on Friday. We'll come back and talk more about that in tomorrow night's newsletter. But just be aware, we are watching rollover right now. And just so you know, guys, my kind of monthly ritual is whenever I see the 15th of the month, anytime I have the 15th of the month, I always know to start watching oil for rollover. We'll also start getting gold for the rollover later on this month. We'll talk about that a little bit later on, right, in the month of May. Now, looking at the rollover here later on this week, got that out of the way. What do we know here about oil? What do we know right now? First of all, we know the market's bullish. Right? Nice big move. In fact, we get a two-legged move running right into a measured move. Let's get that off of there for now. So what do we know? We know we're bullish. What else do we know? We know we have a double top in a bull market. In fact, a triple top in a bull market. And that gives me what? That gives me a trading range. What does a trading range tell me? It tells me I can use the size of this range to create range expansions. Right? I can take the size of that range, copy and paste it down, right? And that second range expansion, that's the one that really is the moneymaker, okay? That's what we know right now. We know we're bullish into a short-term trading range, and I know I want to buy down below that range. What else do we know? We also know that if you zoom out on this a little bit further, you can see, and this of course is nothing new for us if you're with us here on the newsletter every evening, but we are right, we are triangle into a pretty well-defined range. So you can see it bouncing back and forth here, right, inside that range. So it's obviously a range, and we know now, where are we? We're right at the top of that range. So we know right away we have a combination now of multiple trading ranges, one on top, right, of each other. My small range tells me range expansion, right? There's my buy zone down there. Big range tells me, right, what does a big range tell me? Well, what does any range tell me? Ranges tell me sell high, buy low, and avoid the middle, right? That's going to be the hardest part. The hardest part right now is going to be staying away from that darn middle. Okay, what else do we know here? We also know that if we line up these highs, bring it down to that low, boy, does that fit like a glove. That creates what I call a hidden channel. I could also put a midline on there, right? And that midline fits like a glove, as you can see as well. So really beautiful channel. I want to buy off the low of that channel. So we know a lot about this market right now. We're bullish. I want to be a buyer. I want to buy at a level of support. Where can I find a level of support? I've got that buy zone, right, off of that range. 1, 2, right, got that buy zone there. That's a level of support. Okay, what else can I use to support? The low of this range, that is support. Okay, that's good support level. Oh, and then of course the low of that channel, right? That is a level of support. So at this point, it's pretty easy to see where we're bullish. I just don't want to buy up here. Right? Horrible spot to be buying up here. I'd rather be a buyer right down inside that battle zone. So stay away from the middle. The hardest part about this is going to be staying away from, because I would normally say we look for that failure right here, right, and buy back up. But we're right at a very tough spot here right now. Now I will definitely admit that with such a big bull run here, we may get, so if you want to be a little bit aggressive on this, you may get a failure pattern off of that low, but be aware, you are very much playing with fire. This should be a small position size if you do choose to take that trade, because it will be a very aggressive trade. You're right in the middle. You're right into the range. It's just one of those trades where you're probably only going to get a 40-50% winning ratio on that. So what I always tell my clients is that if you're going to take trades like that, you almost want to have a separate account just segmented for those types of trades, because you don't want that to dilute your track record, right? You don't want to go back and look at your results and think, how can I improve this? You don't want to mix the A+ setups, right, in with the C- setups. Not that this is a C-. I would say this is probably a C+ setup there, but we can do better, right? We can do better. For example, I would much rather see us rotate back and forth inside this range, come down to that low. Again, I don't want to buy the high of that range right now. I want to buy low. Here are a couple patterns I'm watching for. One is going to be a two-legged pullback. I want to buy low here. Imagine now we get one leg. We pull back to the moving average, right? We get two legs now. Imagine now we get 1, 2 legs down. Draw a trend line over it. and then looking for that price to get above the trend line and then use that trend line as a key level of support on the opposite side, right? We call these two-legged pullback patterns. Okay, so keep your eyes open on that. If we do end up running 1, 2, 3 down, draw that trend line over, get up and over, and we can use that trend line now as that key level of support. Again, trying to buy the low of that major channel, trying to buy down in that buy zone, as I mentioned earlier, right? Trying to buy the low of that range, avoid buying high on this. What's another option we have? Well, let's say the market doesn't. Let's say it just slams lower here, right? If we slam lower here, going lower, right? We don't just kind of stair step down. We slam lower going down, right? Kind of like it went up here today. If it slams lower, that's going to be quite bearish at that point. And with all that bearishness, what's the best way to trade it? Wait for what we call the nested two-try failure. Let the bears try once to sell it. Let them try twice to sell it. Once we see bears trying once and we see them try twice, then we can look for that rally now, right, going back up into the range, right? So what we'll do is once we see those bears try once, try twice, then we know where stops are and we can buy right into those stops. Again, strong move down, momentum shifts, let them try once, let them try twice, and we'll buy off of that, right off of that low. Again, you're more than welcome to use this range and try to be aggressive with this, right? Looking for a 1 try, 2 try, failure, and back up. That would be the most aggressive trade, right? Because you're right in the middle of that trading range. Let the bears break out, let the pullback traders take it, and then we're literally buying right into those stop losses. That would be a failure pattern. So we talk about two-legged pullbacks, a nested 2-try failure, and a straight failure pattern if we can get that market pulling back here right now. If we pull back and we sit right in the middle like this, right, if we kind of chop around back and forth, not much changes. We still want to get below the range. Let those sellers try to sell that pullback. Once they do, then we know where their stops are, and we can buy right into those stops, right? These are very simple patterns. Let those bears get the market running lower, let them try to sell that pullback off the moving average, and then we look for that run right back up. We're literally buying right into those stop losses as that market rallies higher. Speaking of rallying higher, what if it does rally higher? Okay, here are 3 scenarios you want to keep in mind if this market pushes higher. First scenario is the most aggressive. It's a strong break. That strong breakout, I'm then looking for sellers to try once to short it, try twice to short it, and I'm buying into their stop losses. Let them try once, let them try twice. This needs to be a higher high, guys, right? Make sure you notice that. Higher highs out there. Okay, remember, sellers want to sell high, buyers want to buy low. We talked about that last night on the newsletter. Once we see those bears try once, try twice, now we know where stops are, and we're literally using those stop losses of those sellers. Because when you get stopped out as a seller, what happens? You've got to buy your way out, and it's usually good for a 1-to-1 target from there. By the way, where would that target be? That target would be up to retest that 63.25 high. If it runs all the way up, be very, very careful up here. If it really cooks, right? If it really runs up, then you want to think trap. Right? So if it really runs, you got to know where your objective is at 25, right? Your objective is 25 to retest that high. You don't want to buy high up there, and the best way to avoid buying high is a trap setup, right? That trap setup off of that low, okay? That's one scenario you want to think of, right? It's that strong move up, that 1, that 2, and that go. And again, if it really runs, then you want to make sure that second one goes below the first one. That way you can get the best possible chance so you're not buying into that high. What else can we use here? How about a 1, 2, 3 breakout? Yeah, 1, 2, 3 breakout. This is not as dramatic as the first example, right? Not as dramatic as that first example. The first example goes bam, right? Big breakout. This one goes 1, 2, 3, and then it goes. It's still same thing. We're still breaking out. Now, what do? Mark up that high, mark up that high, and then down to that low right there. Off of that low, There's my sweet spot now, and we're buying that pullback. Not going to be a huge profit target, because again, we're going back up to retest that 25, but that will be your best shot for buying that pullback. Now, I promised a third scenario. What's the third scenario? The third scenario is a strong move up, a sharp pullback, and then we look for 1, 2, trap, and go. Crown reversal. So here's the trick. First one is strong move up, but it has a strong reaction, right? Strong reaction right back down. Let the buyers try once, let them try twice, and the trick is you want that trap, at the very least a double top. At the very least a double top. What do we call these guys? We call these crown reversal patterns. Again, let the buyers try once, let them try twice. I'm trying to sell high here with a trap pattern because I don't want to go against that momentum and sell down here, right? I don't want to sell down there. Now I'm selling low. I don't want to sell low. I want to sell high, right? Think like a professional. Professional traders, they don't let their instincts trade for them. They wait for their setup. Right? We buy off traps lows, we sell off trap highs. All right, so there are a bunch of things to consider, right? I've given you 3 different scenarios: that two-legged pullback, right? That nested 2-try, and that trap off of that low, right? We talked about that kind of C plus setup right in the middle off that failure. And again, breakout 1, 2, 1, 2, 3 breakout, right? Or of course that up, that 1, that 2 trap, and back down. Don't forget, stay away from that middle tomorrow. That's always the nastiest part. Stay away from that middle tomorrow. Oh, and one more thing here before I move over to the S&P and keep this party rolling here. Do you want more information about these patterns? I hope you do, because they are awesome, reliable setups that we use every morning in our trade room. If you want to get your hands on a deeper dive into all my favorite setups, I'll teach you all about how to draw technical analysis correctly. It's all covered in the free trading course, which I'll link up in the upper right-hand corner. I'll also drop a link in the big red button right below this video tonight on our trading blog. So grab it below the video, grab it in the upper right-hand corner. Whatever you do, though, if you haven't done it yet, make sure you join that free trading course, because the free course will walk you through the entire 3-step strategy. It'll teach you all my favorite setups. It's a fantastic, fantastic free course. And what a great bargain, right? At free $99. So don't delay on that. Grab that free course, because in the meantime, I'm going to keep going here. We got a lot more to cover here tonight. Over on the S&P right now, what do we know? What do we know right now? We know we're bullish. We know that with that bull market, I'm seeing 1, 2, 3. Now, this isn't confirmed yet, but that usually tells me there's probably going to be some sort of range up here somewhere. Okay, now what does the range tell me to do? Range tells me, right, take that range expansions down. There we go, right? There's my buy zone waiting down there. A bull market tells me what? Buy at support. Range tells me buy at the buy zone, right? You got it. Absolutely. That's what we know right now in the short term. What else do we know? We also know we have 2 higher highs here. If I take those 2 higher highs and I bring it down to that low, boy, oh boy, that fits really, really well. Now, of course, with that, we could get a pullback all the way to the low of that channel. But as you learned in last night's newsletter, right, Monday night's newsletter, anytime we have a wide channel, what can we do? Add the midline. This midline now comes into full fashion here. Great midline here right now. That midline might just be the best clue we have on this chart. So we know that we're bullish, right? We know that higher high tells me I can take that trend line, I can bring it down to those lows and create that support level below. It's a bull market. I want to buy at support, okay? But the problem is that's a really deep pullback. A lot of times when you see a market make this strong of a move in one direction, you're probably not going to see it pull all the way back. But who knows, right? I mean, look what happened this morning. So that could definitely happen. Okay, and if it doesn't happen, though, grab that midline, and that midline is a great spot to buy off of. So we really have 2 real easy levels, all by using that little higher high. Okay, what else do we know right now? We also know we're right at yesterday's high, right? We're right at yesterday's high. Had that big run up. We talked about that short from last night's newsletter, but sure enough, again, Twitter strikes again, and we go back up and retest the high. What does that tell me? it's a lot like on oil, right? We might be bullish, but we're really not in a great place to be buying right now, right? So what's the best way to be buying here? Best way to buy is to buy a pullback. Or what if we go higher, right? What if we go higher here right now? What else do we know? Ooh, we also know we have one big leg and two legs. Not good. We have major resistance now, or at the very least, we expect to have some significant profit taking up around that 28.68 area overhead. That's a big deal because if we try to buy going higher here, this could easily go right up and come right back down again. So I don't want to get too carried away here, if you will, right? I'm going to get too carried away on this. So we know we're bullish. We know we have a trading range. Range tells me buy that dip. Right? We know we're bullish. Those higher highs give me a nice little channel here to buy off the midline or, right, off of that nice deep dip. And then again, we also know too, if we go higher, careful, got that measured move waiting right overhead. So how do we buy this? There are two basic scenarios. One is the shallow pullback. Two is the deep pullback. Obviously, right? Third one will be going higher here into that measured move. Let's break this down. Looking closer here now. What if we get a shallow pullback? If we get a shallow pullback, it should be relatively straightforward. Strong move down, moving average comes over. Sellers now try to sell off the moving average, and what happens? They fail. It's not a bear market, it's a bull market. The odds are not very good, right? The odds are not on the side of the bears right now, especially with that big run higher, because anytime we see a big run in one direction, it's almost a guarantee we get a pullback and a retest of that high in this case. So once I see this thing start to pull back, profit taking off the high, I wait, right? I wait for the sellers to get wrapped up, right? I wait for those sellers to try to sell off of that pullback. Okay, a lot of rookie traders will try calling a top on this. And if they do, good for them, because now we know where their stops are. Okay, now we can look for a combination now of a failure pattern into a pullback pattern for that run back up, right? Failure pattern into a pullback. So failure pattern, sellers take it, they try to sell off it. We're buying into their stop losses as it goes higher. But then again, don't forget, don't chase after it though, right? Buy that pullback. That pullback is me waiting for you there, right, as well. So what do we call this? We call this a failure, right, into a breakout pullback setup, right? Failure into pullback. But what if we really run lower? Then what do we do here? Well, there are ultimately two types of moves you're looking for. One is going to be that 1, 2, 3, right? That two-legged pullback. One leg, two leg. What do you do with those? You draw the trend line over. You use that trend line as you got it, right? As that key, right? As that key level of support, right? So that's called a two-legged pullback setup, right? Or a 2LP as we call it in our trade room, right? The 2LP, the two-legged pullback pattern, great pattern, always very effective for getting in the very lowest part of that pullback. And again, we're trying to incorporate it now with the low of that channel as well. Okay, what else could we do? What if it just takes off to the downside? Then what? Well, at that point now, that's a very bear market right now. That's a pretty darn bear market. So we have to respect that momentum of the bears. And what I mean by that is we got to let them try once. You want to let them try twice. Remember, this is higher highs here, right? Sellers try once. They're not going to try it again at a lower price. The sellers will try it again at a higher price. Remember, sellers want to sell high. Buyers want to buy low. Remember that saying we had from last night's newsletter? And once I see those bears try once, try twice, right, then we know where stops are, and I can now be a buyer literally right into those stop losses, right? Moving average will usually look like this. Once you get your nice strong signal, right, you're in here for a nice short covering rally. Again, it's all about understanding that even though we're at a level of support down here, the market will be very bearish at that point. It's just like we saw back here, right? Market runs lower. It's very bearish. They try once at the moving average. They try twice, and then it launches, right? Then it launches. Same idea. We pull back, right? We see him try once. We see him try twice, and then we can go. Because I'll tell you, a lot of times that second try runs. Right? A lot of times that second try is successful, and so you don't want to be the first person trying to buy this thing going higher because a lot of times what happens is you'll get stopped out just in time to watch it go without you all the way back in. So what I do is I'll wait for the big strong move down, let them try once, twice, and then we'll buy into, again, those stop losses for that short covering rally. And what I always try to do is, if we can get that strong move down, get those bears trying once, get those bears trying twice, and again, higher, right? Higher highs on those two tries there. If we can get that buy going higher now, then as we go up, look for that two-try breakout, that one, that two, and that will give you one more add-on, right? What you can do is put a full-size position on here, let's say 4 contracts right there, take a quick 1-to-1, right? And then if you get that two-try trap, add one more right there. Right? So it's almost like you're building in your profit. Grab that quick 1-to-1, right? Grab that 1-to-1. It'll usually pull back a little bit after that 1-to-1. Look for that little trap. Again, 1 and 2, trap, and then go, right? I call this a 2-try breakout just because of the way it runs, right? It breaks out, and then it's 1, 2. And again, you want that trap right there because you don't want to trade inside that range, right? You don't want to go, you don't want to be trading back inside the range, be below the range, and the best way to avoid that range is that trap. All right, guys, so beautiful opportunity here. I hope we get that deep pullback because I always want to get deep pullbacks because deep pullbacks allow me to risk small to earn large, right? Leave that runner back up to retest that high. So now we know the plan for a shallow pullback. We know the plan for a deep pullback. What if we just sit here? If we sit here, nothing really changes, right? We're still looking for that 1, 2, back up, or, right, that big move down, right? 1, 2, and then up from there. So not much changes if we stay comatose here right now, right at this 28.54. And again, I wouldn't be surprised if it does for a bit because we're sitting right at yesterday's high. Now, what if it goes higher? The hard part here is if we go higher here, we have reason to believe this is going to be a measured move. Now, it could go through the measured move, right? And if it does go right through the measured move, where else are they looking for? Just like in the Nasdaq, right? They're trying to fill that gap, right? They're trying to fill that gap from earlier on this week. Now, if they do the same thing they did last week, by Friday morning, we'll be back to that gap. So if things repeat themselves from last week, remember last Friday, right into that, was it non-farms? I can't recall what, was it last Friday non-farms? I think it was, right? We found ourselves right back at that gap from the early part of the week. So if history does repeat itself, we won't be there till Friday, but who knows, right? Tomorrow could be a very big day here for those bulls. So we have to assume the first objective right now for the buyers is the measured move. The next objective is that gap fill up at 87.25. First of all, if we break higher here, what's the best pattern we run into a measured move? The best pattern coming off a measured move is actually a pullback, a failure, and a retest. That's my typical go-to pattern once we get to a measured move. So imagine now we run up to the measured move. You don't want to buy into it. It's too much resistance there, right? It's profit taking there. So what we do is we wait for the pullback. The moving average now will come back over, and what you'll do is you're expecting sellers to try to sell off the high, right? They're going to think this move off the high is a reversal. It's not a reversal. It's just profit taking. And so what happens is once we see those bears try to sell off that moving average, so now we know what the stops are. And what's really remarkable about these little pullbacks off a measured move is that because those stops are there, because those sellers are trying so aggressively to reverse the trend, right? When they get in aggressively, they're going to get out aggressively, and usually that's enough to get that 1-to-1 target. Now, what I'll do as a client, right, as a client of mine, is I'll teach you how to reverse engineer this entry, right? You know where your exit's going to be. Once you see that size, the signal, then you'll know, okay, how much do I need for the 1-to-1? But the basic idea is we go up, we pull back, buyers come over, right, or bears come over, they try to sell it, and we're literally using those seller stop losses to fuel that retest. Target is back up, right, to retest the high, right? And some food for thought on this, right? Some food for thought on this. The size of the pullback, that determines your risk. Use that to reverse engineer how big this distance has to be. right? So think about it. If we go up, we pull back, we get those bears now coming over, right? Once we see those sellers there come in, now we know at the very least my risk is this, which means I need to have at least that much space to get that 1-to-1 risk reward. The reason why this is so important is because if you have less than that 1-to-1, professionals won't take it because they know better than trading any time where they can't at least cover their rear end, right, on that reward. The stops will take care of the rest, right? So as long as you can get that 1-to-1, again, think about your exit before you plan your entry, right? If we can get that 1-to-1, then the stop loss is sitting right up here. They'll do the rest of the work, right? Those sell stops will run and get stopped out. Now, another scenario obviously would be we make a run for it, right? We go through the measured move now and we get the 1, 2, 3. This could easily happen. This really could easily happen because, again, we get that gap fill overhead. If that's the case, though, okay, mark up that high. Okay, mark up that high down to that low down here, right? Not this one. That's the rookie one. This is the professional low, right? Find that low right there. Oftentimes they will line up. These two lows will line up, but many times they won't, though, right? A lot of times you won't get a bounce off that. Anyways, at that point now, there's your sweet spot, and now we're buying off that sweet spot. Now that area there. Imagine now if we blow that area up here real quick. Right? Imagine if this area is there, right? There's your channel. Okay, so we go up, we pull back. Now what will happen is we'll look for that seller failure pattern, right? That combination of that failure into pullback, right? So imagine this is, imagine that's expanded there. We pull back, the bears try to sell off the moving average. We're buying into their failure again, right? One of my favorite ways to trade is getting in when the opposite side of the market, the counter trend, the counter momentum, right? In this case, it's a bull market. The bears in the market are getting stopped out, right? And guys, I want to remind you, I'm just drawing the screen right now, but if you want to see hundreds of real examples of these patterns off real charts, right, grab that free course. Right, I send everybody on that free course. Again, it's linked up in the bottom here as well. A daily chart lesson, right? That way you guys can learn, right, and earn with that free course as well, right? So grab that free course. You will not be disappointed. Everybody loves it, right? In the meantime, though, here, let's keep going now over to that Nasdaq right now. Over to the Nasdaq here. On the Nasdaq, what do we know? What do we know here right now? We know we have one big leg and two big legs. Okay, what does that give us? A measured move. What is a measured move? It's a major objective, right? In trending markets, the most reliable is a measured move. Now, I know. What about the 1272? What about the 1618? Yeah. Those will be there, but I want reliable. Okay, the only thing that matters, I always use the analogy of, right, go into my garage right now. Okay, you've got a Ferrari that barely starts, and you have an old pickup truck, right, a 20-year-old pickup truck that never fails you. Okay, which are you going to drive to work today? Right? You walk into your garage. You get a super sports car that barely ever works for you, right? Or you have an old jalopy, right? An old beat-up VW Bug that, sure enough, it always gets you from point A to point B. Which do you want? It's all about reliability, right? It's all about reliability. So if I have to choose between, this is a one-to-one, right? That would be a 100% extension, okay? Or maybe a 1272, right? Or maybe it's a 1618, right? How do you know which one to use? Which one should I use? The one that I can set my clock to. And I know that, yes, every once in a while we'll get the 1618. I know that, yeah, the 1272 can be common, but I know that out of all of these, what's most common is that 100%, that one-to-one. Everybody knows how to find a measured move, and because everybody's doing it, that's what works the best. All right, so skip all the exotic calculations. It would be easy for me to sit here and cherry pick a couple examples. Well, look at this. See, there's the 1382, just like I said. I could do that to you, but we're not going to get a high enough reliability for a 1382 or a 1272 or a 1618. Sure, They will hit those every once in a while, but time and time again, I see measured moves 1-to-1, the 100% extension acting as the most reliable, dependable, day after day level I want to use in my trading. Take that for what it's worth. You're more than welcome to overcomplicate things by using less reliable structure. I like the 1-to-1 for that measured move. That's what we do know. What else do we know here? We know we have a strong move up. Now, what does a strong move tell me? It tells me anytime I see a strong move in one direction, I'm almost always going to get a pullback and at the very least a retest the high. Anytime I see a strong move in one direction, I expect to see a two-legged pullback and a retest the high. And then maybe up to another measured move. 1, 2, and then 3, which, well, hello, there's my gap fill. Surprise, surprise. This could easily be symmetrical tomorrow right up to that gap fill or into Friday morning's trading session. So we do know measured move, but most importantly, if we can get a pullback, we can almost guarantee at the least a retest of the high, at the very most that 1-to-1, right, measured move, 100% extension. What else do we know here right now? Beautiful reversal line. Beautiful reversal line, right? A double top that never comes back to touch, right? Beautiful, naked, untouched, whatever you want to call it, virgin, whatever, right? Beautiful. Now, a quick word about reversal lines. Reversal lines, you oftentimes, what will happen is, you'll often see a reversal line do this. It'll oftentimes go up, give a quick pullback, and then go. I don't even count that. Right? It's just too close. What almost always happens is sure enough, right when you don't think it's going to come back, it'll come right back in, and that's the right. It's kind of like in that two-legged pullback. When it comes to a two-legged pullback pattern, right? The best types of two-legged pullbacks go up and over, right? You don't want to take a two-legged pullback like that. Those don't work very well. You want to get them right. You want to get them up and over. Right? Up and over, almost like to create some separation, almost like to fool the market almost, right? So the fact that we go up, we double top that area, and it has never come back to get it. Again, even if it came back quickly right there, I would still ignore that little pullback if it did. It didn't, obviously. We go up. That's a great level of support. Okay, so we know we're bullish. We know we have that strong move up. We know that strong move up is probably going to give us, right, a chance to buy that. And wouldn't we love to buy, right, off of that 74.55 area? What else do we know here, guys? We know we've got higher highs. What is that? That's a 1, 2, that's a 1, 2, 3 reversal, isn't it, right? 1, 2, 3. What do? Mark up that high, right? Mark up that low, right? There we go. There's a channel. So now we have that channel. Okay, what do we do with channels? We buy the low of that channel. So we got tons of opportunities here right now. I think also, too, mark up that high, bring it down to that low. Put the midline on there, right? It's a wide channel. We talked about anytime you have a wide channel, toss that midline on there. And that midline, shallow pullback, channel line, deep pullback, reversal line. This whole area looks gorgeous down here. All we need to do is get a pullback. But what if we don't? What if it keeps going higher? Well, we know where we're trying to go, and so I got to make sure I get in before we get there. So let's get a little more intimate now with this chart. What's the best way to trade that pullback? What are some options right now? One option is a shallow pullback down to that midline, right? Moving average comes over. Bears, they try to sell off the pullback. What do they have? What happens, right? It's not a bear market, it's a bull market. They fail. We're buying into that failure. I already told you guys already that when we get to a measured move, what happens? It almost always comes back, failure, and retest. Very, very common, right? Very common. And again, I can use the midline of that channel, reversal line there, shallow pullback, right? So shallow pullback here, right? Shallow pullback here. We pull back. Moving average comes over. Let those bears sort of sell into it, right? You're buying right into their failure. Okay, what about deeper pullback? What if it really is a deep pullback down to that low of the channel? Then what? Could be a 1-2, right? Could be a two-legged pullback, right? 1, 2. Draw that trend line over, right? Up and over and in. Remember, you don't want that little tiny little like that, right? That's not going to work very well. You want to go up, over and in. That's the setup, right? That nice clear, again, almost as if to fool you. Okay, it's amazing. The best setups are usually the ones that go against your instincts. It's one of the most challenging parts about being a trader, right? Now, as we go lower, maybe it just runs, right? Maybe it runs like we saw back here, right? Maybe it runs lower. Then what do? You wait to try once, try twice, and go. Yeah, I know. In hindsight, it's easy to say, no, just buy it down here. But come on, you see that much strength going in one direction, and you're going to buy it just because of support? You won't be trading very long if you do that, right? If you buy into a very strong bear move like that, just because of support level here, it'll only be a matter of time before you get stopped out a few too many times before the market runs. You'll pull your hair all out, right? You'll lose all the money in your account. Trust me, I've been there before. When you try to go against momentum like that, 1, 2, and then up from there. Okay, so as we get that run lower here, don't try to just buy it because there's a good chance it'll pull back and run you out. And then once you're stopped out, right, and you're cursing up a storm, guess what? You've really got somebody pissed off about. It's going to blow right higher again without you. Okay, that's the mind, that's the mind games the market plays on you, right? You try to buy that first dip, and what happens? It rolls over, it stops you out almost just to laugh in your face, and then while you're picking up your tears off the office ground, right? It runs back up, right? Almost to make you look like a complete fool. Okay, the markets do this to brilliant people. In fact, I truly believe, right, the more highly educated you are, the smarter you are, right, the higher your IQ is, I swear the markets have that much more fun just pulling your strings all day long because you can't force it to go back up. And so if we do see that momentum push, right, let them get that second try and then buy into their stops. Or what I always do is I look for that 1, that 2 before they get to it and buy into those stops from there. And then again, because same pattern we're talking about the S&P, right? If we do get the lower, right, that deep pullback, we get the bears trying once, we get them trying twice. Now we know all the aggressive sellers are in, the conservative sellers are in. Now we can look to buy that break going higher. And then again, don't forget you've got a level over here. That's your target now. As we go up, it's the 1, it's the 2, it's that trap, right, and that run, right? It's that trap and that run. That's usually going to be your best bet once you're getting in off of that failure, right? In a perfect world, it would come down, roll over, we buy into stops, moving average comes over, right, and we buy that pullback. The problem is that pullback doesn't always happen. Right? It doesn't always happen because of short covering rally, right? The sellers just got whooped. And so now those bears are getting out frantically as the market rallies higher. So you're seeing it scramble and you just don't want to chase after it. So you wait for that trap, right? And you grab it off the trap. Obviously, there's a signal candle involved. And you'll learn all about the signal candles we look for and the setups we look for, right, in that free course. All right, guys? So that covers the pullback here now. What if we go higher here? Let's look left. Okay, if we go higher here, the big concern I have right now, I'm not so worried about the 75.51 level because chances are there are probably a lot of stop losses sitting up here, and so we'll probably blow right through it. So I'm not too worried about that being a major level. It is a level of resistance, but I would assume there are probably stops sitting up there, and you'll probably get a nice big break higher through it. The problem we're going to have, though, is if we do get this thing to break higher, how do we get in this thing before we get that gap fill, right? That really is the most important thing right now. So if we do make a run up, what are 2 patterns? One's going to be the breakout pattern, right? The 1 up and the 1, the 2, and the go. I'm looking for a trap up here because you want to get in as low as possible so you're not buying too close to that gap fill. So strong move up, right? Really strong, right? Real big blitz. Big green candle, right? Big strong move up. Bam. Okay, that's running stops off that prior high we talked about. Now, let them try once. Let them try twice. When they try once and go higher, every single buyer out there places their order right there. Right? They're just hanging out right there now. So now as it pulls back, buyers are already waiting for it, right? And they'll get in right away off that trap. because they know it's put up or shut up. It's get in now or miss this move. They know that gap fill is a big neon sign that says target, target, and they're going to buy that trap. Okay, that's the most aggressive way, obviously, requires an aggressive punch higher here. What if we don't get that? What if we get the 1, 2, 3? That's fine with me too. Mark up that channel, and we're buying the low of that channel. I hope we get that. I just don't know if we're going to get it. I think we're more likely to jump because those stops I talked about, right, as we wait overhead. One more thing here, guys. If we do sit sideways, right, if we do sit sideways, if we start going sideways here, what's the plan? 1 try, 2 try, let those bears try twice, and we're buying back up from there. All right, guys, we look great in this Nasdaq. Nasdaq, a beautiful run. And boy, great job from last night's newsletter anticipating that, right, for today. Over on the gold right now, what do we know on gold? What do we know on gold? No, besides it's a mess. What do we know? We know it's a range, right? What's a range tell me? Range tells me sell high, buy low. What else? Avoid the middle. What else do we know about that range? We know it's bullish, right? Strong bull move into the range. What does that tell me? It tells me that being a buyer below the range is a whole lot more reliable than being a seller above the range. It doesn't mean I can't sell. It just means I need a different pattern. Okay, what else do we know here? We know we have a falling resistance trend line. I know that when I look left, I can see that lines up beautifully back here and creates almost like a hidden channel. I can put the midline on there and it fits a glove. Beautiful channel. What does that channel tell me? I can use that as a level of support. Okay, what else do we know? We also know we have that big channel we found earlier this week, right? I took the midline off of it just temporarily just so I wouldn't clutter up the chart too much right now. But there's that big boy, right? Yeah, this channel hasn't missed any meals, right? It's not missing any meals, right? It's a well-fed channel. It's a great-looking channel. Okay, so we know we got that big channel too, right? That big channel there as well. Now, put them all together, right? What does all this information tell us? We're bullish into a range, right? I want to buy below the range. Okay, I've got a shallow pullback. I get a deep pullback. They're different, very different. What's different about it? Momentum, right? Shallow pullback, be aggressive. Okay, deep pullback, be patient. Okay, what else do we know? If the price goes up, I'm open-minded to a breakout, but I've got to see a bright pattern up top there, right? Can I sell the top? I can sell the top, but because we're bullish, I got to wait for a very specific pattern. Right? I got to wait for a very specific pattern to sell off that high. Okay. This will be a little bit of the same stuff here that we talked about, right, on the Nasdaq, but let's get this chart cleaned up. First of all, stay away from that middle, right? Stay away from that middle. This middle could get real nasty. And if it does get into this little kind of vertex here, or these come together, we oftentimes see big breaks. And those almost always come right back into the range. Okay, this is the one thing about a triangle. Triangles are ranges with an expiration date, right? That's what they are. Triangles are ranges with an expiration date. Once we get that, right? Once we get to that nitty-gritty point here now, what almost always happens is we get a breakout, right? And that breakout either holds or it folds and goes back in. Same thing, holds, right? Or it folds and goes back into that range. The key, though, is don't chase the breakout, okay? Don't chase the breakout, okay? That doesn't work very well in liquid markets. Triangle breakouts may work in the stock market, low float stocks, right? Cryptocurrencies, things that don't have any liquidity to them, right? In real liquid markets, though, those breakouts, you have to hold first. Okay, so really at this point, I know my range. I know I'm looking for either a shallow pullback outside the range, right? Strong move down. Relatively strong, not that strong, right? Shallow pullback over, moving average comes over, let those sellers try to sell off the moving average. We're buying into those stops. Now don't forget, we don't want to be buying into the range. We're buying as we go back into the range, not inside the range. You want to stay out of that range. Then look for the pullback, right? And that pullback now, you got it. That pullback is your next go-to. Again, stay out of the range. Okay, so if we get a pattern that sets us up like this, that's not the pattern you want. because that's putting you right inside the range. Remember, plan your exit before you plan your entry, right? Where's your exit going to be? Your exit has to be this trend line coming down, right? Where's your entry? Your entry right there. Is that a 1-to-1? Can I get at least a 1-to-1? No. I cannot risk small to earn large. Know where your exit's going to be, and then ask yourself, right? Would JJ do this? I'm kidding with you, right? Ask yourself, right? Is this allowing me to attract other traders into this market because of the big reward? Is there a big reward there? This trade, right? This pattern, a 1-2 off of that, right? Off of that modest low, that is a pattern we love. That's got a small risk with a much bigger reward. That will attract a lot more traders into this market. And just like we know about the self-fulfilling prophecy, when you got more people on your side, right, that's a better chance that trade will work for you. Okay, that's the shallow pullback. If we get a deeper pullback, right, again, down to this hidden channel here, right, deeper pullback, down to this major channel, right, if this thing just bolts, what's going to happen? Too much momentum, too bearish. We're at a major level of support though. I'm not just going to buy it because that's support. I'll let the 1, the 2, you got it, right? And now that I have the conservative and the aggressive bears in, we're looking to buy this thing, right, as it goes back up into that trading range. And remember, in a perfect world, the moving average would come over. We could buy that, get in the pullback, right, and add to our position there, right, for a failure into a pullback. In a perfect world, that's what happens. In a perfect world, we get the 1-to-1 first target. It pulls back, and you can add to your position. It doesn't happen like that very often, right? That's why I always say textbook patterns only happen in textbooks. You've got to be comfortable with being okay with patterns that aren't perfect, right? If we do see it run up, then what? Stay away from that range. What's the best pattern? 1, 2, look out. Trap coming your way, right? Trap, failure into trap. And why do we use trap patterns? Trap patterns are the secret to avoiding, right? Avoiding buying high, right? Avoiding buying high. You know, good example back here, big move up here, right? We run up, everybody knows top of the range. What do? They buy the trap right there. It's the psychology of the market, right? Price goes up. They don't want to buy high up here. What do? They wait to buy that trap. Still not a good spot to be doing it, but that's a good example just on this chart right now, right? When we know we're at resistance or we know we don't have the available space we need, right? We look for those traps. So now we know the shallow pullback. Now we know the deep pullback. What if it goes up here, right? If it goes up, well, first of all, if it goes higher, it's a range. So if it goes higher, I want to sell it back down in. The problem is that it's bullish. So what's the best way to sell if the market's, right? If the market's bullish? Well, let me remind you, what's the best way to buy it if the market's bearish? We let them try once. You got it, right? So same basic idea. We go up higher, right? Now remember, if we blast and hold and go, right? What do we call that? The 1, 2, 3 breakout. If we get that pattern, mark up that high, down to that low here, right? And there's our sweet spot, and we're buying that pullback, right? If we get that pattern, if we get that 1, 2, 3 higher high on strength, we're marking up that new channel, right? Finding our sweet spot, right? And buying in that sweet spot, right? Around the low of that channel, around that reversal line, okay? Or we go up, but now we can't get that higher high now. Now we pull back once. Buyers try, the aggressive buyers, right? The 236, the 382 buyers, right? They're buying aggressively here. The more experienced, right? The seasoned buyers, they're waiting for a deeper pullback, the 50% pullback, right? They're buying, they're saying, no, I'm not going to buy that high, right? I'll buy a little bit lower. They try once, they try twice. Once I see those buyers trying a couple times, right? Then we can drop it back in. Same idea over here, right? We go up, the buyers try once, the buyers try twice, right? And it dumps back down. And I'm not making this stuff up, right? You'll see these examples over and over again on these charts. And again, right, you want to wait for the proper signal. Make sure you've got that risk-reward ratio nailed down. I provide all of my clients with a checklist to make sure you go through each of the rules, many of which I've already talked about here today. So we know we're looking for the 1, 2, 3 breakout, mark up that channel, right? right, and buy the low of that channel, or up 1, 2, and then look out below for that big drop back down into that trading range. Again, stay out of the middle, buy those lows, sell those highs, right, or look for those breakouts. How about some euro right now? Wrapping up on the euro. Quite the interesting week it's been on the euro. Extremely low volume right now. You can definitely tell the euro is really walking on eggshells, most likely because of the trade deals that they're trying to work out between the EU and, of course, the U.S. Department of Agriculture, right, the U.S. Transportation Administration, all of the auto tariffs, right, the cheese and cow, right, I mean, all this stuff that gets traded back and forth across the Atlantic is, it's all up in the air right now. And that is why I assume this currency is, well, again, walking on eggshells. Today was pretty interesting, though, because what we know is we have a bull move up. We know we have this trading range. And as you remember from last night's newsletter, my exact words last night was I wanted to get above this, right, this line up here, right, and get it and use it, right, and buy this thing back up, right? Well, what happens? Flash crash, right? What was it, 10:15 this morning, right? We hear on Twitter, right, about the auto tariffs going to the EU, and sure enough, the market jumps back up. So we get this strong move down, we chop around and right back up again. Okay, so whenever I see that happen, I almost think about it as never happened, right? You'll see those every once in a while, right? The market will be trading inside of a range, right? Market's in a range or market's doing something, right? And you'll see it just go shoot down, chop, 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 and then right back up. I pretty much ignore that whole entire move because it was, well, obviously completely irrelevant. It had nothing to do with the market. It was responding to some short-term stimulus, and the market, because of its value, right, because markets never lie, goes back to where it really wants to be. So I'm pretty much ignoring this move, right, except for one thing, momentum. I've got nice, strong bull momentum. And anytime I see nice, strong bull momentum, I know we're going to probably see, right, that second leg. So knowing this right now, I'm still trying to use this trend line here. I'm still trying to get this trend line over to be a buyer off that trend line. But really what I want is, because you can see here, I've got this, again, we're bullish. We're below that range. I'm lining up these lows right now. This looks like a beautiful spot to be a buyer here right now. The only problem I have here on this euro is I think we're going to get probably one more attempt to go lower here, right? They're not doing a very good job at holding the moving average. And usually you can tell based on how the market responds to that moving average what they're thinking right now. And they're thinking this is too high to be buying right now. So I'm expecting to see here, right, that move back down. Two ways to trade it. Move back down, buy it off that trend line. What I'm going to do for tomorrow is try to get that moving average over, get that test, that failure, and then buy into those stops from there. That'll be a lot more reliable here for tomorrow, right? That failure into that pullback as we go higher, right? What else? What if it jumps? If it jumps, right? If it jumps higher, what do? We know where the range is. We know where the objective is right now. If it jumps higher, I want to get that 1, that 2. The best way to get long when you don't have a lot of open space is that 2-try breakout, right? Strong move up, okay, once, twice. If this would have been a higher high here, this would be qualifying for it. It's not a higher high, though. It's got to be a higher high. Okay, that higher high is critical because at this point now it could go up. We could see one more round of sellers and right back down in, and that would work too, right? That would be the same thing. Bears try once, bears try twice, and we're buying off of that, again, off some level of support here on the way back higher. If it does go up, higher high, pulls back, beautiful. Nice strong signal candle coming off the trend line, and we're headed back into that range. I would expect, though, it'll go up 1, 2, trap, and we're in off of that low. Now, what if the market goes lower here? If it goes lower, that big round number is probably going to be where it's trying to go. And lately, the euro has gone down to it and then gone into a range. So watch out for it to go down to that big round number, go into a range. And if it does get into that range, it is very much bearish at this point. 1 try, 2 try for the buyers. And we're looking to sell back down again. Use the big round number as the big magnet, and then you got that low, right? Just a little bit lower there, right, for your runner. Okay, so again, if we do end up crashing down, watch that trading range here. Don't sell low, sell high on the back of buyer failures. Target number 1, low of the range. Target number 2, low of the move from the beginning of the month. All right, guys, that's the plan. If the market goes bearish on me, but I think right now, though, the writing on the wall says we should be headed back up into that trading range. And as always, right, as always, the strategy is pretty easy, right? The strategy is pretty easy. What's not always easy are the markets, right? They're complicated. Sometimes the markets move very fast and you got to make split-second decisions. Sometimes the markets move very slowly and you got to stay patient, right? Whether it takes duct tape or handcuffs or a shock collar, you got to wait patiently. Sometimes the market does exactly what I think it will do, and I've got to have confidence to pull the trigger. Sometimes the markets do exactly the opposite of what I'm expecting, and I have to be okay with that and keep waiting for more information. Guys, don't forget, that's why our trade room is such an important part of being a client here at School of Trade, because the strategy is simple. What's not so simple is, what are we going to get tomorrow morning at the opening bell? I hope I'll see you there with me tomorrow morning, 8 o'clock Eastern Time, Monday through Friday. Membership is easy. Join the advanced courses right below this video tonight on the website. Join the advanced course. If you're not ready yet to be a member, that's okay. We get a great free trial right to the left of my ugly mug. Hit that free trial button. That'll give you a free pass for our trade room, a free course to learn the strategy, and of course, hundreds of examples of what we find every morning in our trade room. Guys, hope you love it. Hope you guys enjoyed the video tonight. Come back and see us tomorrow morning, 8 o'clock Eastern Time. We'll do it together. And as always, we'll see you guys same time, same place tomorrow night on the next edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.